Hello, how are you?
Very good. How are you doing, Stephanie?
I'm good. I'm good.
Good. We're
Um,
currently live, I believe. I'm
oh,
filling
okay.
in, I'm filling in for Cindy here.
Okay.
Um, so if I understand correctly, though, you are um, going to be able to share your screen and you'll have a
Yes.
PowerPoint presentation after I'm finished, correct?
Yes.
Okay, wonderful.
Yes. Yep. I'll be the presenter and then I can send you a PDF of our PowerPoint then.
Yes, please, please. Great. Okay. Well then, and will there be any other speakers besides you?
I'll be the only speaker, but I will have some fellow employees joining me to help with Q&A.
Okay, wonderful. Good, good.
All right.
Okay, well then we will just pause here for about 9 minutes, okay?
Okay. Thank you.
You're welcome. Good afternoon, everyone, and welcome to our webinar on Pennsylvania taxes for new businesses. We have a lot of people registered for today's training, and more will be coming in here very shortly, I am sure. So I'm going to get started with the introduction since we're on a limited amount of time today. My name is Corey Riley. I'm a business consultant with the Penn West Clarion SBDC, and I'm happy that you joined us today. Today's presentation will help you learn and understand the roles, laws, and procedures to follow as an entrepreneur and a business owner. I've been a business consultant and a business owner for a number of years, so I know how important all of this information is going to be to you. Most tax delinquencies often stem from misunderstanding Pennsylvania laws and procedures. So we're going to highlight some of the common errors, discuss income tax, sales and use tax, exemption certificates, and employer withholding tax. In addition, we're going to learn some guaranteed tips for success and your rights as a Pennsylvania taxpayer. The Pennsylvania SBDC, though, is partnering with the Department of Revenue to present to you a four-part series offered monthly. Today's topic, as I mentioned, is Pennsylvania taxes for new businesses. The other three topics that will be coming up over the next few months is getting started with MyPath, sales tax basics, and withholding basics. We hope that you plan to join us for all three of these in the months ahead. Before we get started, though, let me review a few reminders for our webinar. Today's webinar is being recorded, and we will share that recording with you along with all the presentation slides and our webinar series flyer. All participants have been muted and video disabled. So if you have a question for our presenters, use the Q&A button within your Zoom. If you have a question for myself at the SBDC as your host, please use the chat button. Let me now introduce you to the Small Business Development Center in case you've never heard of us before. We're a grant-funded program with a mission to help businesses start, grow, and prosper. We provide education, information, and tools to help businesses make better decisions. We do this through our business consulting services and training. Our consulting services are provided at no cost and they're confidential. We offer training seminars on a variety of topics that target the needs of you, the small businesses. With that said, a small business to us is generally a business with less than 500 employees. We also use our funding to provide access to database information and resources related to conducting industry and market research, financial analysis, and implementing marketing strategies. The SBDC also partners with economic development organizations all across the state. So we're always looking for ways to connect you with other resources to help your business grow. As you'll see here on the slide, there are 15 SBDCs across the state of Pennsylvania. And the neat thing is that we're all located within an institution of higher education. That's a wonderful thing because it opens up the amount of information that we can pull from in order to help your business succeed. We're a part of America's SBDC, which is a national network that enables individuals and businesses all over the country to access our program services in their neighborhood. The Small Business Development Center is the place to turn to for no charge business consulting, helping you set up your business and answering any type of business related question that you have while you're operating your business. So as you'll see on this slide, and again, this information will be sent to you, you can sign up as an SBDC client to utilize our services. Next, I'd like to introduce you. Whoops, I just clicked on that link there. Hold on a second. So I want to introduce to you Stephanie. She has over 20 years of experience in customer service. She currently works as a research analyst in the core division of the Customer Experience Center. She started her career as a phone representative with the Customer Experience Center back in 2019. Throughout her years, Stephanie has served in many different roles within the Bureau, all of which have allowed her to work directly with the customers of the Department of Revenue. So at this time, I'd like to switch over this training to Stephanie and her and a group of panelists.
Thank you. Just give me 1 second here. I'm not able to share my screen.
Okay.
Let me try that. Yeah, it's giving me an error, unfortunately.
Um, let me see here. Good. There. Go ahead and
Okay.
try now.
All right. Thank you.
You're welcome. There
All
we
right. Thank you so much. And good afternoon, everyone. And again, thank you for joining us today. Again, my name is Stephanie Schreck, and I'm a research analyst for our Customer Outreach Relations and Engagement Division here within the Customer Experience Center for the Department of Revenue. I am honored to have an opportunity to talk to all of you today about Pennsylvania taxes for new businesses. So in our experience, we have found that most taxpayers work very hard to comply with Pennsylvania tax rules and regulations that pertain to their businesses. But we also know that tax law is not always the easiest thing to understand. So our goal is to walk you through some high level information that you should know as a new business owner. We're also going to point out some common errors to avoid, which can ultimately save your business both time and money. So let's get started. So here it shows our agenda for today. You can see that we are going to talk about a few different tax types, including income taxes, trust fund taxes, and business use tax. We will also be discussing exemption certificates and great tips for success and your rights as a taxpayer. All right, so let's start with income taxes. So businesses have an annual income tax filing requirement, just like any taxpayer. The type of business structure that you have determines what form you will use when filing. So sole practitioners report income and expenses using the PA Schedule C for each business. These are people that do not have an EIN. Instead, their business is associated with their social security number. The owner of a single member LLC that receives net profit income reports its income and expenses using the Schedule C as well. Owners of a single member LLC that owns and operates a rental property will report its income and expenses using the PA Schedule E, the rents and royalty income loss. Partnerships, both general and limited, are required to file the PA 20S65 information returns and provide each PA resident partner with a PA RK1, each non-resident partner with a PA schedule NRK1. If the partnership is taxed as a partnership for federal income tax purposes, these businesses will have an EIN number. All right, so in addition to income taxes, you may also have what's called trust fund taxes. A trust fund taxes are collected by business owners and then held in trust until they are paid to the Commonwealth. There are 5 taxes that represent trust fund money, but today we're only going to focus on 2 that will most likely pertain to your business. And these are withholding tax and sales tax. It is important to remember these taxes must be reported timely and remitted in full to the Commonwealth. Again, you are simply just holding these taxes in trust until you file and pay. Please keep in mind that these funds should not be used to cover business and or personal expenses. So we do suggest that you keep these funds in a separate account until you are ready to remit them to the department. All right. So here we have 5 taxes that represent trust fund money. Some or all of these may pertain to your business. First, we have withholding tax usually occurs when an employer withholds state income tax from their employees' pay and then remits the money to the state. Sales tax is levied on the sale of tangible personal property and certain services. The next 3 taxes are mainly associated with vehicle leases and rentals. And as well, the new tire fee they collect, They fall under what are termed as PTA, taxes and fees. PTA stands for Public Transportation Assistance. The vehicle tax pertains to a car rental from businesses with an inventory of 5 or more vehicles for rent, and the tax on liquid fuels, which is just what it sounds like. It's tax that endures by consumers, although the distributor is liable for the collection and payment. So please note that trust fund taxes must be accounted for on an accrual basis of accounting. Accrual accounting looks to match revenues and expenses based on the business cycle of the firm rather than the actual inflows and outflows of cash. Therefore, sales tax liabilities are recognized at the point of sale, not when the cash is actually received. All right, so what is withholding tax? Withholding tax is usually when an employer withholds PA personal income tax from their employees' pay and then remits the money to the state. In MyPath, which is our customer portal, you will see withholding tax broken down by 3 withholding types. The first type is employer withholding. This applies to regular W-2 employees. The next is other income withholding. And this is for like non-wage withholding, usually reported on a 1099 miscellaneous or a 1099 NEC. Typically for small businesses, this would normally apply to independent contractors. Right. If you need assistance with determining whether an individual is a W-2 employee or an independent contractor, you will need to determine a few things like, is the worker being hired for a temporary project? Can they choose where and when the work is performed? Do they use their own materials for the work being performed? Are they being paid a flat rate or an hourly rate that is invoiced? So as a rule of thumb, if you've answered no to all of these questions, chances are they would be a W-2 employee. If you are still uncertain whether someone is a W-2 employee or an independent contractor, you can always complete the federal form SS8 and the IRS will make the decision for you. All right. And then the last withholding type that you will see is retirement withholding. This is reported on 1099-R forms and it applies to withholding taken from retirement income. In PA, withholding is taken at the time of the retirement contribution, not the distribution, provided certain qualifiers are met at the time of the withdrawal by the employee. So this most likely is not going to pertain to business owners, as most of the time retirement plans are administered by third parties. So the next question is, when do I withhold? So if your business is a sole prop, a partnership, association, corporation, government body, or any other entity that employs one or more persons, it is required under the Internal Revenue Code to withhold federal income taxes from the wages paid to the employee. You are then required to withhold and remit Pennsylvania personal income tax from the compensation you've paid your employees. Therefore, the very simple answer is every time you issue a paycheck, Pennsylvania law requires the employer to withhold Pennsylvania personal income tax from employees' compensation. And 2 very common cases, when a resident employee performs services within or outside of Pennsylvania, and also when a non-resident employee performs services within Pennsylvania. Currently, Pennsylvania's income tax rate is 3.07%. So this means you must withhold 3.07% for any employee who lives in Pennsylvania, regardless of where the work is being performed. And you also must withhold 3.07% for any employee who lives outside of PA if the work is being performed within our state. So when is it due? The current schedule for employers to withhold and remit employee taxes on wage and salary can vary. The frequency of remittance is based on the amount of withholding that is required. So the greater the amount of withholding, the more frequent you are required to remit. The return should be filed every quarter, excuse me. And there is also a W-2 reconciliation that must be filed on a yearly basis. All right. So how do I file and pay? The department has a customer portal called MyPath for our customers to electronically file and pay. MyPath is an internet-based filing system that allows our taxpayers to, again, to file returns, make payments electronically with no cost. So it is free to use. Please simply visit mypath.pa.gov, sign up for your user profile, and the MyPath customer portal does have logged in and non-logged functionality, but most business tax transactions must be completed as a logged in user. Right. And if you have any trouble while you are creating your account, we do have several Revenue 411 videos that are available to assist you with some step-by-step instructions. Right. It is very important to note that under regulation, any payment of $1,000 or more must be remitted electronically. So I strongly encourage you to use my Path portal rather than sending a check in by mail to avoid any additional penalties. Right. And if you have any other questions relating to withholding tax, any of the requirements, we do highly recommend for you to check out our REV 415 Employer Withholding Information Guide for additional information. All right. So up next we have sales tax. So what is sales tax? Pennsylvania sales tax, again, is levied, excuse me, on the retail sale and consumption, rental, and use of tangible personal property. This is including digital products and certain services in Pennsylvania. Currently, Pennsylvania sales tax rate is 6%. However, by law, a 1% local tax is added to purchases made in Allegheny County, and a 2% local tax is added to purchases made in Philadelphia. There are some major items exempt from sales tax, which include food that is not ready to eat, candy, gum, most clothing, textbooks, pharmaceutical drugs, sales for resale, residential heating fuels such as oil, electricity, gas, coal, and firewood. Generally, services to the human body, such as haircuts, massages, are also exempt from sales tax. Additionally, permanent landscaping services, except for grass cutting, are generally exempt as well. So when do you collect it? Sales tax must be collected at the time of the sale, unless the sale is on credit. Taxes due on credit sales must be remitted within 30 days of the date of the sale. The seller is liable for reporting and remitting taxes and fees, with the tax covering the period in which either a taxable sale was made or the tax or fee should have been collected. All right. And as I said earlier, sales tax is based on accrual basis counting. This is the most commonly used accounting method where a business reports income when earned and expenses when incurred, as opposed to a cash basis accounting, which reports income when received and expenses when paid. All right. So I'm sure many of you might have more detailed questions regarding sales tax or, taxable services. Unfortunately, that is not something that we are going to cover in detail during this presentation today. But we do have a sales tax basics presentation that will be running in the future. So we do recommend for you to check that out. And you can always review our retailer's information guide, the REV 717, for more details regarding sales tax. All right, so when is sales tax due? Unlike withholding, sales tax filing frequency may vary. When you are new sales tax filer, you are set up on a quarterly filer, meaning your returns are due in April, July, October, and January, but your filing frequency can change. So every year, the department reviews each business that files returns to determine whether or not the filing frequencies should be changed. If such a change is made by the department, the business is notified in writing. So it is very important to pay attention to the notices being sent, because you do not want to be in the position where you were a quarterly filer that has now been changed to a monthly filer and you've thrown out your notice, so you were unaware. All right, so how do we file? So just like withholding tax, we have our MyPath system. Again, you would need to create a profile. You would need to log in to be able to start the filing of the return and remitting of the payments. All right, and just like withholding tax, any payment of $1,000 or more must be remitted electronically. All right, so use tax. Use tax by no means is unique to Pennsylvania. Excuse me. Every state that has a sales tax also has a use tax. The purpose of use tax is so that Pennsylvania businesses are not put at a disadvantage to businesses who are not charging sales tax. So sales tax is imposed on taxable goods and services at the time of the sale and collected by the seller. So in some instances where the seller does not charge the sales tax on the taxable item, the purchaser is now responsible for remitting the tax on their first use. This is use tax. So use tax exposure occurs most often when a business buys taxable goods over the internet or through a seller that does not charge PA sales tax. So in these cases, the purchaser must pay their use tax obligation in the month following receipt in Pennsylvania. This is also true for purchases a business makes while out of state, where no sales tax is charged. Excuse me. The items become taxable upon delivery into Pennsylvania. The department's audit experience shows that most businesses owe use tax, but many do not pay it. It is estimated that upon an audit, usually 80 to 90% of businesses are found to owe use tax. So please be aware, use tax applies to individual customers as well. So it's not just a business tax. Now, we do have a use tax voluntary compliance program, which allows you to go through your records and voluntarily come forward and pay any use tax liabilities. Maybe you've never heard of use tax before, or maybe you just didn't realize no sales tax was charged. But rather than wait for the department to audit you and charge additional fees, you can self-report any delinquencies, and the Pennsylvania Department of Revenue would waive the penalties. These penalties can range from 5 to 25%. So how do we file and pay? Any business that occurs use tax liabilities on a regular basis is encouraged to register for a sales and use tax account. This is done on MyPath. So as we've previously discussed, MyPath is the online customer portal. You would need to log in, create your account, and then you would be able to remit your use tax return and payment timely through the online system. All right. So the importance of use tax. So while the sound of filing and remitting use tax might seem unsettling, remember that our education and enforcement of the tax might help level the playing field for our businesses. So without this effort, Pennsylvania businesses operate at a 6% disadvantage to online and out-of-state businesses. So that's what the importance of use tax is for. All right, so for example here, taxpayer A opens a kitchen supply business. As part of their business, they need furnishings for a business office. So they pursue different quotes to get the best deal. So in our first instance here, they get a quote from an out-of-state seller who can ship the goods into Pennsylvania via third party. The out-of-state seller is not required to charge sales tax. In the second instance, the taxpayer gets a quote from a Pennsylvania business, and of course, by law, must include sales tax. So on first glance, it might look like the better deal is with the out-of-state seller. Many taxpayers would think that, excuse me, and would make the purchase, resulting in a loss of sale from a Pennsylvania business. And of course, lost tax revenue to Pennsylvania. However, applying use tax, the out-of-state seller's purchase price actually becomes $10,706. So when the tax is calculated, it's actually the PA business who has the better deal. This is the purpose of use tax, to keep Pennsylvania sellers from being undercut by out-of-state sellers. Sales and use tax would not apply on products purchased if you are selling them to a customer. Excuse me. All right, so now I would like to take a moment to discuss Pennsylvania exemption certificates. These are known as the REV 1220s. This exemption certificate is used by a purchaser and seller to document the reason for a sale of taxable property or services where tax was not collected. If properly completed and when accepted in good faith, the REV 1220 will relieve the seller from collection of tax. Exemption certificates are required to substantiate all exempt sales with the exception of the following: sales to government entities, sales of non-taxable tangible personal property or services, or sales where delivery is required to be made outside of the Commonwealth. There are a couple important reminders for the exemption certificate. The first is that there is not a generic business exemption. Many taxpayers think that because they are a business, they are exempt. When completing the form, the reason for why the property or the service is exempt must be filled out, and it must be signed and dated by the purchaser in order to be valid. Sellers should be also aware that a hard copy exemption certificate must be kept on file by the seller and should show both the front and back pages. Documentary evidence must also be retained by the seller on these transactions. So we suggest that you staple a copy of the sales receipt to the exemption form when received. Also, please note that upon an audit, you can be assessed for sales tax not collected based on an invalid exemption certificate. All right, so let's talk about some tips for success, resources that the department has to offer, and the rights of both taxpayers and the Department of Revenue. So the first tip for success is to maintain adequate records. A question that all new businesses have is, how long do I need to keep my business and tax records? There is no clear answer to that question. Since each business is different, but we can provide you some general advice. So most of the time, the answer is going to be 4 years, which means the current year plus the 3 previous years. For payroll, you will want to keep complete payroll records showing the proper withholding and remittance of Pennsylvania personal income tax, the wage expenses for at least 4 years. For mortgage or capital asset or investment records, you will need to maintain those documents throughout the life of the obligation, as they will be used for depreciation and cost recovery calculations. For purchases made during a tax year, you will want to keep record that will help to document current assets, inventory, claimed expenses against your income. Again, we recommend kept for 4 years. Also, please keep record of any sales tax paid by you at the time of a purchase or use tax paid as well. If you operate in multiple states, you will need to keep detailed records of Pennsylvania sales as well as detailed records for every other state where you do business. You'll want to keep keep a file, of all exempt certificates and write the transaction number at the top to make it easy to find in case if you would ever be audited. Additionally, we mentioned that it is a good idea, again, to staple the sales receipt to the exemption certificate. But we cannot recommend any specific product to use for record management. We will let you know that there are various software products available that will help you to keep your records, your books and records in proper order. If you have like a smartphone, you can also download a free scanner app. This will allow you to use your camera to save PDF copies of receipts for when you are traveling. Our next tip is to keep your address up to date. We're going to talk about address updates, and we know that there are some of you who are going to think, gosh, who cares about that? This might seem minor, but it is often overlooked and is a very important to help us communicate effectively with you and the business. Many taxpayers will get behind on their tax liabilities and obligations simply because they're not receiving our correspondence. And this is because their address is not up to date. So as mentioned, when talking about sales tax, again, about every November, the department reviews, the sales tax, the amount of sales an entity will have, and they may determine that your filing frequency needs to be increased and bump you to a monthly filer instead of a quarterly filer. In this case, if your address is not up to date, you might not have known that your filing frequency has changed, and now you are considered delinquent with the department. So delays in correspondence about overdue tax liabilities can extend the time it can take to resolve them, could cause additional charges like interest, penalties, possibly collection agency fees to occur. The easiest way to keep your address up to date is by using MyPath. When you are on MyPath, you can simply go out toward the More tab section, and we have a panel labeled names and addresses. And from there, you can click a link that says Manage Names and Addresses, and you can go ahead and you can make sure your address is up to date for your business through there as well. All right. Another tip is to file and pay on time. So for income taxes, this is generally a once a year event for you and your business, but we can tell you the number of times we have heard someone say, I forgot they were due. Failure to pay and pay income taxes or estimated tax payments due can result in penalty and interest charges. Another feature on MyPath that you can use is to set up due date reminders for all of your tax accounts. This is a great way to ensure that you are compliant with your filing and payment deadlines. For trust fund taxes, due dates vary depending on the amount that you are regularly collecting. So please be sure to educate yourself on your business's filing and payment frequencies. There is information on our website pertaining to both withholding and sales tax obligations. Again, the department applies penalties for late filing as well as late payments. So please be sure that you are properly submitting everything. The next tip is separate bank accounts for your trust fund taxes. We do highly recommend keeping a separate account to hold the trust fund money and to pay the tax due. If you do not keep them separate, you could end up spending the trust fund money and not realizing you're doing it. Excuse me. So as mentioned earlier, please do not use trust fund money for business or personal expenses. It is important to know that using trust fund money for anything can be considered a criminal offense. All right. And then our tip here is take advantage of our electronic services. This is the fastest and most efficient way to get things done. So everyone sure remembers back in March of 2020 when everything was shut down, there was nobody in the office to manually process items. So using electronic services ensures everything keeps moving, even when you have to take the people out of the process. So I know we've talked about some things you can do through MyPath, but there is so much more. So I highly encourage business owners to use it. Again, you can do due date reminders. You can use MyPath to view, save, or even print invoices. You can request a electronic statement of accounts that are available immediately. You can submit it for payments. Again, any payment over $1,000 or more must be submitted electronically, or you could be at risk of an EFT penalty. And there's many other options available on MyPath. So the department, again, does have many 411 videos that can assist you with the process of using our online portal. So please keep your eye out for those. And last but not least, the final tip is safeguarding your data. As a business owner, it is important to protect your data and confidential information at all times. So let's quickly go over some tips to ensure the systems are secure. Install anti-malware, antivirus security software on all devices. And we mean all devices, laptops, desktops, cell phones, tablets, routers, and make sure that these are set up for automatic updates. Using strong passwords and using different passwords for each account. Password protect wireless devices, consider, maybe even using a password manager program. Encrypt all sensitive files and emails. Back up sensitive information. Make a final review of return information, especially direct deposits, but prior to submitting the filing. Clean or destroy old computer hard drives and printers that might contain sensitive data. Limit access to taxpayer and employee data. And also, finally, check the IRS's e-services account weekly for a number of returns filed with your EIN. So if you or someone affiliated with your business feels they are a victim of fraud, please contact our fraud detection and analysis unit. They are here to assist you in these matters. All right, so let's review some other tips that we have and some resources that will help you achieve success. All right. So a lot of people will ask us where they can go to get useful tax information, and the number one place is our website. So our website We recently actually rolled out a new format, which you can see here on the screen. And you can actually find information very quickly regarding the tax type or even a topic by selecting a highlighted section here on the slide. All right, so our website can be used to obtain forms, schedules, make payments, returns, file appeals, things of that nature. Our websites are compatible with all devices. On this slide, I have an example as to what our website could possibly look like if you were using a mobile device. All right. Sometimes you can visit our website and you might have a specific question in mind. So we do have an online customer service center. To be able to get to our online customer service center, you would simply select the customer service link directly from the homepage of Revenue's website. So once you've clicked the customer service option, you can just type your question or term and then just hit search here in the search field. And depending on the question, it could pull up thousands of frequently asked questions or FAQs that we are constantly monitoring daily and making adjustments as needed. Now, as you've looked through these FAQs and you realize that they're not really answering your question, we do have an option that you can send a question to the department. And this is where our submit a question comes into play here. All right, so you do have to create an account to use the submit a question feature on the website. We have over 30 different types of categories to help direct your question to the proper place. Just a reminder, please search for what you need first before submitting the question. All of our FAQs, again, are reviewed daily and monitored by subject matter experts to make sure that the information being provided is accurate and up to date. All right, and then if you still need to submit your question, you will receive a confirmation screen, such as shown here on the slide. And usually these messages are responded anywhere with about 72 business hours after submission. Now, if you would like to speak to someone directly, you can contact the Customer Experience Center, which is available Monday through Friday, 8 a.m. to 5 p.m. Our representatives are trained to handle pretty much most of the calls coming into the department. Now, if you want to see somebody face to face, you could visit a district office. We do have a list of all the available district offices on our website, but we do highly recommend that you contact that district office first to set up an appointment before visiting one of them. All right, so let's review some rights that you have as a taxpayer. So we've recently revamped the Taxpayer Bill of Rights. Pennsylvania has Taxpayer Bill of Rights that ensures equality and fairness in tax administration and enforcement. The Taxpayer Bill of Rights sets a uniform procedure so that Pennsylvania Department of Revenue treats everyone equally and fairly. So again, as a taxpayer, you have access to the following guarantees: the right to quality service, the right to be informed, the right to confidentiality, the right to retain representation, and finally, the right to challenge the department's position and to be heard. All right. So as per the right to challenge the department's decision and be heard, you can file a petition with the Board of Appeals. It is very important to know that there are appeal timeframes, which does need to be followed when petitioning to the board. Generally, timeframes to file an appeal is about 60 to 90 days from the mail date of an assessment, and depending on tax type. For if the taxpayer is not satisfied with the decision from the Board of Appeals, they can then appeal to the Board of Finance and Revenue. Generally, that time frame to appeal with the Board of Finance and Revenue is about 60 days from the decision date from the Board of Appeals. All right. And again, if the taxpayer is not happy with the decision from the Board of Finance and Revenue, they can file with the Commonwealth courts within 30 days of that decision. For specific appeal timeframes for each tax type, we do recommend reviewing the REV 460 or the REV 1799A. Both of these are available on our website. All right. So we've discussed the rights of a taxpayer, their representatives. So let's review what the department's rights are. So earlier we talked about record keeping. This ties into the department's right to audit. Please keep in mind, we do not perform audits just to find out what businesses are doing wrong. It is more of a standard business practice to ensure that everyone knows how to do things the right way so that all businesses are treated equally. Anytime an audit is conducted, the department will provide the taxpayer with a complete explanation of the audit findings for that individual taxpayer and their rights during the process. Again, if you would get an audit notice, don't be alarmed. It doesn't mean that you've done anything wrong. Again, audits are standard business practices of the Commonwealth. All right. Please keep in mind that we are having this session today so that you do not land here. We want to let you know that the department does have these options, but we are trying to help you avoid any further enforcement. If you do not file a return, pay the tax due, file a timely appeal for a tax balance, the department does have the option to use tools listed on this slide. The left side shows some of the more common enforcement tools, to where the right side includes tools that we have to use when we receive little cooperation from taxpayers. So again, our goal today is to help you avoid the scenarios that are listed here. All right. All right, so trust fund taxes, again, are treated a little differently. So failure to collect and report sales tax monies can lead to civil penalties, including 50% of the unpaid tax, and criminal penalties for theft, embezzlement, or misappropriation of government funds. This is in addition to standard penalties and interest. This is an example where the cost of non-compliance is much higher than the cost of compliance. Something unique to trust fund tax liabilities is that the attaches the responsible party. So the law that the liability is enforced against is such person, his representatives, or any person receiving any part of such fund. On a practical level, this means that owner of a limited liability company that goes out of business with unpaid trust fund taxes remains liable for those taxes. Liability does not go away with a defunct business. That means the department will pursue collection against an individual using all available enforcement tools, which would also include liens. Again, we do not want you here. We are just bringing this to your attention so that way we can help you not hit this area. We've talked previously about protecting yourself so that you do not become a victim of fraud. This slide is telling you what to do if you suspect someone else is reporting fraud. Tax evasion is a crime that hurts all Pennsylvanians, because when the taxpayers do not pay their fair shares, decreases the revenue available to fund essential state programs and services. If you suspect tax fraud, report the activity directly to the Pennsylvania Department of Revenue, including as much detail as possible. You can use the contact information listed on the slide, or you can go to our website and search fraud, report suspected tax fraud activity. All right, so if after listening to the presentation today, you find yourself thinking that you might have a tax requirement that you weren't aware of, again, we do have the voluntary disclosure program. This is often referred to as our VDP program. This program was created for individuals and businesses that have not met their tax obligations because they were not aware of them. The department's liaison officer will work to make sure that all of the taxpayers' filing and payment requirements have been fulfilled. There are incentives for coming forward in return for their voluntary disclosure, filing the returns, clearing their tax debts. Taxpayers are only responsible for the payment of tax and interest. Penalties for all taxes administered by the department would be waived when the requirements of the voluntary disclosure agreement have been completed. All right. So we do want to let you know that we do have several social media platforms. Generally, we use these outlets as a means to push information to taxpayers. We post tax law changes, fast facts, events, anything new that is going on with Pennsylvania taxes, or even with the Department of Revenue. All right. We also have the REV 588, the REV 717, and the REV 415 are good staples for all new businesses. These will provide good information for getting started. And again, these are all available on the department's website. All right, so that includes our presentation today. Again, thank you all for your time. And I hope you guys all have a wonderful day.
I want to thank Stephanie for this great information, and I want to thank your team that you brought with you today that is answering questions in the Q&A. Really appreciate it. Before you all leave today, I just want to thank all of you that also attended this training. I hope that you found it to be helpful. You will receive a follow-up email from us within the next day or two with the slides from today, some additional resources, and the link to sign up for individualized business consulting through the SBDC. You're also going to receive a request to complete a survey evaluating this training. We kindly ask that you take just a few minutes to complete this survey because your feedback is very valuable to us in providing you with good training. And might I say, this training was brought to you at no charge by these wonderful people. So this is just something small that we ask in your return. Thank you for your time today. Again, please don't hesitate to reach out to us with any additional questions. Stay well, and we hope to see you at another event soon. Take care, everyone.